Hey, Tyler Wharton, let's bring him in from Business in Vancouver. Good morning, Tyler.
Good morning, Steve.
All right, we're beginning with some inflation numbers that were out today, of course.
Yeah, in just an hour's time, I should also mention that the new federal Liberals, they're going to be giving an update on the economy along with these inflation numbers that we have out today. And what they're doing is trying to give Canadians a peek into kind of give them an update on what's going on fiscally and economically for the country since the Conservatives left government. Now, if you recall, earlier this month, new Treasury Board President Scott Bryson, he said that the outgoing Conservatives had left the fiscal cupboard, quote, fairly bare. So right now, they're going to be dealing with some challenges because, of course, the Liberals promised billions of dollars in infrastructure spending to jumpstart the economy that's been weakened by low commodity prices and low energy prices as well, which is, again, that's having an impact on the inflation numbers I'm going to speak about in just a second here. But Finance Minister Bill Morneau, he's going to be discussing the challenges in about an hour about what it means for the economy when they're trying to introduce a lot of spending when there may not be all that money there to spend, so to speak. And they also want to keep the budget balanced by 2019. So some challenges lay ahead. And let's take a look at those inflation numbers now, because what we're seeing right here is the inflation is up 1% on an annual basis across Canada. That's unchanged from September. These, of course, are October numbers. And in BC, it's a little bit better. It's 1.3% because, of course, the economy, we should have healthy inflation. And that's what the Bank of Canada Core Index is all about, is they have a target rate of about 2%. So right now, it's at 2.1%, so that's very close to the target rate for the economy, and it's really being affected in these current numbers. They really emphasize that it's all been affected by kind of the decline in energy prices we've seen in the last year. So still some challenges that await the economy, even though inflation is doing okay right now.
All right, let's quickly talk about Plenty of Fish and a big score for them.
Yeah, well, of course, Plenty of Fish, they announced in July that they were going to sell the company for $575 million US. Now, it was founded by Vancouverite Marcus Friend. He owned every single share in the company. It's all going to his pocket in a deal that's closing this quarter. The other big thing that's happening is that the parent company now, Match Group, they debuted on the market yesterday, and their stock just went soaring. It ended up closing 23% above the opening price of $12. So it's right now at $14.67 when it closed yesterday afternoon. So the essential thing here is that with the acquisition of Plenty of Fish, that was the Match Group's last remaining big rival. They had already bought out, say, Tinder, OkCupid, and of course, they already own Match.com. So by securing their last big rival, it really sent a message to investors that, you know, this is going to be the online dating service to invest in on the market. And what we're seeing right now is a lot of enthusiasm from investors with that opening price that we saw. And I think they raised about $400 million during their IPO yesterday.
Well, a lot of money and love.
Absolutely, yeah. I agree.
Okay, Tyler, thanks.
Thank you.